It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, October 8th, 2015. We're squeezing out the last few drops of this incredible week we've had. Tons of volatility. For tonight's newsletter, crude oil is bullish after sellers tried twice to keep the price moving lower. So we're looking for buying opportunities on crude. But hold on, we have an unfilled gap back near the lows, along with a potential measured correction. Tells us to stay patient on Friday for all the bulls on crude oil. How about the S&P? The ES is bullish with two important bull trend channels this evening. We get a measured move giving us resistance overhead. The key tomorrow in the S&P is waiting for that measured correction off today's highs. And I've got a pretty tasty area for us to be waiting patiently for on the S&P tomorrow. How about gold? The yellow metal is range bound. We still got that bullish bias on gold. And after today's bear trap, wasn't that a beautiful bear trap today? After today's bear trap missed a retest of the range highs, we're expecting to see those sellers make an attempt back at those lows, which is perfectly fine by me because I'll be waiting patiently for them to fail at these lows to keep buying this thing back up. How about the euro? The 6E, the currency future, is range bound and potentially bullish on the euro, as the buyers have already tried twice to send this price higher. We have the best buying opportunities at the lows of the range tomorrow or back above the range highs on Friday. We have a plan for all you Euro traders. As you can see, we got a great plan for tomorrow. Got a great newsletter in store for you guys and gals. Before I jump into the charts for today, though, I do want to remind you, make sure you're watching our video tonight on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel, that's wonderful. There's a description inside the video. You'll see a link in the description that'll take you right over here to our blog page. A couple of reasons why. First of all, if you're not a member of School of Trade, I would love to invite you to come out and attend our trade room as a guest. Grab your free pass to test drive the trade room in the upper left-hand corner. In the lower left-hand corner, I'll invite you to join our nightly newsletter mailing list. All I need is two things: your name and your email address, and then make sure you check your inbox. I'm going to send you a verification email as well as ask for some feedback. So don't forget to send me some feedback. Join our newsletter list right below the video left-hand side, and then directly below the video, you'll see a spot to download all the charts that you're going to see me going over in tonight's video. You can grab all those charts, have them ready for tomorrow. Follow that link below the video. And then over on the right-hand side, you'll see a spot to learn about our free trial membership. I take a lot of pride in the fact that you're going to learn more with me in 1 week for free $99 than you will anywhere else on the interwebs. You can also learn more about what it means to be a member. You can read member reviews, and you can also contact us for assistance every step of the way. Guys, we've had a great week here so far. I still can't believe how juicy that trap was on gold today. Beautiful opportunities all week. We got one more day here in this second week of the month of October. Let's jump right in here. Tomorrow's a Friday, so don't forget, Fridays are early in, early out. Remember, the best opportunities tomorrow will be in that morning session, ultimately before 11:30 a.m. Eastern Standard Time on Fridays, right? We don't trade the afternoon on Fridays. We'll be holding on to positions into the close on Friday, but we definitely don't. We want to be very careful trading late on a Friday because, a lot of gambling that's going on. All the professionals have already wrapped up for the week, and we want to trade when professionals are trading, and they're not trading. They're not entering into new positions on Friday afternoon. Not to worry. We'll be opening up our trade room tomorrow morning at 8 a.m. Eastern Time. We'll be watching all of these in real time. Let's start out here with the crude oil, the black gold, and no surprise here, right? No surprise here. We really played this market like a fiddle this week. We knew we were looking for seller failure to buy it up. That was earlier this week. Then we looked for the correction back down. Yeah, that was 2 days ago. And then today, of course, we knew we were waiting for seller failure. Try it once, try it twice, seller failure, right? Didn't get that full correction. I was actually expecting, as you saw last night, I was expecting to go a little bit lower. But boy, when it never even came back to fill that gap, it was pretty obvious we were bullish. We watched it also in a very short-term time frame this morning, the trade room, where we went sideways, and eventually we were able to crack that high and send it higher as well. Lots of easy ways to know to be a buyer today on crude, whether you looked for the 2 tries from the buyers or the failed 2 tries from the sellers. It didn't matter. It didn't matter. Now, that unfilled gap down around 47.82, that we got to take that seriously. Remember, gaps love to get filled. We just don't know when they're going to get filled. So that kind of plays into what our plan is for tomorrow. Here's the deal for tomorrow. Crude oil is bullish after sellers tried twice to keep price moving lower, so we're looking for buying opportunities. But hold on, that unfilled gap down at the lows tells us to stay patient on Friday. The bull channel tells us to look for buying opportunities at the lows. Okay, bull channel, long-term bull channel tells us to look for buying opportunities at the lows. The trading range has a bullish bias to it, right? This trading range has a bullish bias to it. We have a midline of that range. Lines up beautifully with the low of that channel. And then, of course, we have the low of that range. Difficult to say how far back we're going to get it, but those are 2 very tasty areas at the low of the range. At the low of the channel, which happens to line up with the midline of the range. That's key support. And then, of course, the range low, which happens to fill the gap. So those are 2 very important areas where we really want to be looking for the opportunity here to be buyers. So as you can see, no matter what we do, buying right now is really not as desirable as it was at the beginning of the day today. Today's one of those examples, at least tonight, we look at this and we say, okay, the easy money is behind us right now. Just like we talked about 2 days ago, we want to wait for that correction and then wait for those sellers to fail to buy it back up. We're ultimately in the same scenario we were 2 days ago, right? The easy money was on Tuesday morning. The easy money was on Thursday morning, right? You got to wait for it to rotate up, correct back, rotate up, correct back. So in all reality, this thing may keep going higher tomorrow. If it keeps going higher tomorrow, we're going to keep waiting patiently for measured corrections to buy. I personally have a hard time buying at the high, right? We made the easy money already. My job as a professional is to trade the most reliable opportunities. And right now, being a buyer up here is just definitely not the most reliable. So the gap at 47.82 tells us to stay patient. At least wait for a measured correction. And, of course, those spots we're looking for right now. Again, I'm guessing right now on the measured correction. But here's one example of a measured correction back down. Right? Another example for a measured correction back down. There are a bunch of different opportunities here right now. I couldn't tell you where they're going to be tomorrow. But I do know where we have the most reliable opportunities. And that'll be down around the channel lows. That'll be down around the range lows. Honestly, I don't think they're going to make it that easy on us to do just a breakout pullback right now. I can't imagine. They might, but again, it's unlikely that we get just simply one shot right here. It's very unlikely that's going to happen. Okay? If it does, well, so be it. If it jumps up, then again, I'll be watching the moving average, waiting for those measured corrections back down, and I'll have to get in after the fact. But I refuse to buy at the high. I refuse to buy at the high. It may work once in a while, but again, my job as a professional is to come in and execute my plan every day. And my plan is very specific. Buy the lows, don't buy the highs, measured corrections, channel rotations in trending markets. Guys, this is going to be an interesting one tomorrow. This is going to be a definite interesting scenario tomorrow. We're definitely bullish. Now it's just where do we want to pull the trigger? You got to wait for those measured corrections off these highs right now. Like I said, the easy money's behind us. We made the easy money earlier on today. Now we got to stay patient and don't get greedy on the crude. Now, okay, back to the S&P. Here we go. There was no question about the direction today, was there? There was no correction about. There was no question about direction in the S&P. As I was joking around yesterday, saying this market felt like it went off its meds the past 2 days, and it really hit. Today we literally saw this thing stopping everyone out. But if you were looking at it from the eyes of seller failure, like we talked about last night, right? We saw the price go lower, right, early in the session. Sellers try once. Sellers tried twice. You got the seller failure right there, and it never came back. So obviously the S&P is a little bit chaotic right now. FOMC meeting minutes. Everyone's wondering if they're going to raise rates this year. By the way, just for the record, back in March, my stance has never changed. There's no way they're raising rates this year. Do you really think they're going to mess things up for any recovery in Europe, in China? I don't see it. I don't see it. So I don't see any reason why we can't continue this push higher here on the E-mini. Guys, I'm not a fundamental trader. I'm a technical trader. So I'll let the chart do the talking for me tomorrow. That's the way. It's just easier that way. You know, you ask a million people, you'll get a million different answers as far as what the Fed's going to do and how that plays into equities. It's just a bunch of nonsense. I'm going to trust the chart. Right now, the chart tells me we're bullish with two important channels. Channel number one is the major channel. That gives us a nice, tasty target going higher here. Channel rotation, channel rotation, channel rotation. So we won't surprise. I won't be surprised here if we continue up to the high of that channel. Remember, the question is not direction. The question is, where am I going to find the most reliable buying opportunities on this? In comes the second channel. The second channel is a lot easier to swallow. Of course, we have the channel rotation. High down to low, back up to high, back down to low, right? So that's where we can definitely be looking to sink our teeth into, back down around that secondary channel. It also lines up with a nice prior swing. Not the most important thing I've ever seen, but again, looking to buy on a pullback right now. Buy on a pullback. Now, the bullish trend. Okay, the bullish trend tells us to keep looking for buying opportunities. But today's big push higher, which just so conveniently goes into a measured move, right? Today's push higher tells us to stay patient. We're up around that measured move. And here's what I think when I see this chart. When I look at this chart, I think perfect. Bull channel, bullish trend, I want to buy. The measured move tells me I can't buy right here. So, channel rotation tells me to expect price to eventually end up back at these highs. The measured move says not going to happen right now. I'm now looking for a measured correction. A, B, C, D, measured correction, very similar to what we talked about on crude oil. Guys, this market is by far the most challenging environment we're seeing this week. It's not going to be like that every week, but this week you can clearly see this market. It's got some sand in its shorts. You know what I'm saying? It feels a little bit agitated. It feels like nobody really has a good grip. Again, like I said before, my goal all week this week has been seller failure. Let those bulls keep running it up. There's no question about direction right now. But if you're like me and you don't have the unlimited resources like a Goldman Sachs just to keep buying it every time it goes higher, I'm going to have to be smarter than that. I'm going to have to trade like a professional who needs to protect their capital. Measured corrections, wait for the sellers to run this thing lower, and then we'll be watching tomorrow for those sellers to fail for the best buying opportunities. What I would really love to see is that correction back off this high, right? Dig on in, and then seller failures to bring it right back up. That's where the easiest money is going to be. Will we get it tomorrow? We're going to have to come out and see me tomorrow morning, and we'll see together if we're going to get it. Now, finally, over to some easier markets here. Now, crude's been a walk in the park. And guys, remember, crude's always my favorite market. Crude just seems to just click. It makes sense. It's very easy to see where we're going next. The S&P right now is dramatically being affected by all the shenanigans that are happening out there at the Fed. How about the gold? The yellow metal is range bound. Boy, wasn't that a great trap today? That was a beauty. That was just a beauty today. We had that previous trading range, and this thing just, we had those sellers just hook, line, and sinker, man, and then just took right off to the, that was such a classic bear trap. We talked about it last night. If you didn't watch last night's newsletter, this is what being a trader is all about right there. You knew those sellers needed to make the correction back lower. You also knew it was going to put it right back inside the original range from today. Sellers try once, sellers try twice, bam. Oh, it was beautiful. It was beautiful. As you can see, I get excited when things work out as planned, right? If you don't have a plan, how do you know what to be looking for the next day? That's what we're here today. Okay, so we're range bound. We got a bullish bias. Don't forget. We do have a bullish bias here coming out of last week's non-farm payroll report. Now, we do have to remember that as the week gets later, we'll be looking for certain clues that tell us this bullish bias is definitely easing out. I don't really think we have those clues just yet, right? Sellers defended those lows very nicely here, right? Sellers defended the lows. The one thing, though, that I noticed here is that miss at the high. So, well, let's read the text up top here, upper left-hand corner. After today's bear trap missed the range highs, see how it missed that range high? Now, remember, a one-tick miss can either mean unfinished business or it can mean complete failure. We won't know that until we get down to the lows. That's what we're going to find out. So, we've been waiting for those. Let's see here. Let's get back up to our text at the top here. I lost my train of thought. Funny how that happens, right? So we missed the range highs. Now we expect to see the sellers make an attempt at the lows. Remember, range rotation, right? So we rotate from the high back down to that low. They couldn't finish the job at the low. We go back up. Oh, wait a second. They couldn't finish the job at the high here. So we're likely now going to finish that rotation down to that low. And that's where we're going to be looking for those sellers to fail so we can buy it right back up again. Let's keep going. Our job right now, let's not lose sight of what our job is. Our job is very straightforward. When you see a trading range like this, you buy those lows and you'll sell those highs using failure patterns. Stay patient for those traps at the highs, traps at the low, and watching for the price action closely because we're going to be watching for this two-try rule. Okay, now, A, B, C, D puts us down to these lows again. I don't think there's any question about where we're going next on gold. We're definitely expecting to see this thing run into those lows. That's where we're going to make our money tomorrow, or lose our money if we don't stay patient. Here's what we're looking for tomorrow. First things first, as we get down to those lows, I'm looking for seller failure to buy the low. Where we get a little bit crazy tomorrow is if the sellers take it even lower. This is where the two-try rule comes into play. If you're a member of mine, you know exactly what I'm talking about, and we'll be watching it tomorrow together. The two-try rule basically says, I'm going to give these sellers 2 attempts to send this price lower. Where would it be going lower? 1122 and 1112.5. Those are the targets for the sellers if they do have that strength, right, for tomorrow. You got to love the language, right? So we know we're coming down. It's all going to be what happens at that low. You got to watch closely. If it just rifles through that low, then you've got to be real aware those sellers are there. Then we're going to wait for the second try, and if they fail, we're going to buy it. What I'm worried about tomorrow is if we rifle through that low and the second try goes lower. That's going to be where we really got to hold on, wait patiently. I'd rather miss the continuation lower and be ready for the failure because that's the higher probability trade. Let me repeat that. I'd rather miss that push lower because remember, that's not reliable. I'd rather miss that. If I miss that push lower, oh well. I'll be waiting for those sellers to fail again, and I'll put it right back where we came from. I will always be okay with missing the breakout. Remember our job. In a trading range like this, our job is straightforward. Buy those lows, sell those highs, and watch closely, be suspicious for all those breakouts. It's exactly the same plan that we're going to apply on the euro here up next as well. Okay, so we're going to be watching that area at the lows very, very closely here. I do expect us to get down to those lows. It's how we react from there. Are we going to keep pushing? If we do, be very patient. Be very patient. Do not force that sell, right? You'll always live to trade another day as long as you don't force it, okay? And that's part of that's half the battle. Being a new trader is like being a boxer. If you go into the ring and you go swinging for your opponent's head, you're going to get your head knocked off yourself. Stay patient long enough to understand what's happening. If you miss it, you miss it. There's nothing wrong with missing it. What's wrong is when you force it, because you know you're going to lose money that way. And every time you lose money, you're one strike closer to getting knocked out of this game, and you're back to your day job. So, euro is range bound. Let's wrap it up here with this euro. Now, here's a good example of a market that is range bound, and the buyers have really put together a good show here right now. The buyers are flexing their muscles, and they're definitely showing us they could mean business here. Let's take a look. Euro is range bound and potentially bullish, as the buyers have tried twice. We have the best buying opportunities at the lows of the range or back above the range highs on Friday. The trading range tells us to buy the lows and sell the highs. But the buyers tried twice today, so above the range highs, and we're bullish. The bullish channel tells us to buy near the lows, but that puts us right smack in the middle of the range. So we need to be patient for seller failures before we buy the middle. Let's play the game here now. As you can see, we start the week off. Look at the volume. Look at the volume. We're completely sideways right now on this euro. So ideally, if you want to be a buyer right now, you want to wait to buy on this pullback. The hardest part, though, is if you buy the low of this channel, you're buying right smack in the middle of that range, and that's not going to be easy. So first things first, let's talk about the most important thing on this chart, which is the range. Remember, when you see a range-bound market, that trumps the channel. That's why I have this labeled as a possible phantom trend line. We undershot the channel high. That may not even matter today or tomorrow. And the reason why I say may not is because, again, the range is the most important factor on this chart. It has to be. So, with that trading range, here's what I'm seeing. Buyers tried once, buyers tried twice. That tells me is that if we stay above 1301, the range highs, we're bullish. However, below the range highs, we're bearish, and we should expect the sellers to try to rotate this down to those lows. That's where you want to be buying, right? That's where you want to be buying. Whether we're in a bullish market or not, that's where you want to be buying at that range low. And like we said about gold, we'll wait for price to make the move lower, seller failure, and buy that low. Okay? If they break down and we can't keep it above that 1221, it's going to try to make a run for these next support levels below. Again, I'll gladly miss those moves lower to stay patient for a failure at these lows to buy it. Why? Because that's what my job is as a range trader. So, the trading range tells us above the range highs in this example, in this scenario, because of those two tries by the buyers, above the range highs, we're bullish. Below the range highs, we're bearish down to those lows where I now want to be a buyer. Okay, that's the most important information for tomorrow. Then we have this sneaky little channel that's sneaking in here right now. Again, you should not trust this channel. Okay, I don't want to hear any hindsight trading if it just blows right through it. Okay, the reality is the most reliable opportunities are going to come in these ranges at the highs and lows of the ranges. This channel is begging to make it very difficult for us. We know channel rotation. We're expecting price to rotate from the low up to the high, down to the low, up to the high, down to the low, up to the high, back to the low, and then back up. The problem is, though, again, is that I don't want to buy the middle of that channel or the middle of that range. And so what you really want to do is, if you want to buy this area here, I'm going to wait to see a higher low, sellers trying twice and failing, if I'm going to be a buyer. Then make sure, don't get greedy. Target back at the range high, target back at the swing high, and then you get a range rotation and a channel rotation target for long terms. All right, guys, you got the plan here for this euro. Again, no question about direction. I definitely like the idea of being a buyer right now. The question is, where are we going to buy? Are we going to buy above the range high? Are we going to buy seller failure at the channel low? Or are we going to wait for that phantom trend line to fail and then buy that low? Careful sellers. You're on the wrong side of this market being a seller at this time. That may change tomorrow morning. Speaking of tomorrow morning, I'm going to open up my trade room tomorrow morning with you guys and gals at 8 a.m. Eastern Time. I would love to have you there with me as a brand new advanced member. While I have a few more minutes of your time, please don't forget, we get a great free trial here at School of Trade. I take a lot of pride in the fact that you're going to learn more with me in 1 week on that trial than you will anywhere else on the interwebs. And while you're here, don't forget, we have a place for every trader on the planet, whether you're brand new, whether you're learning the ropes, or whether you're a grizzled, experienced veteran that's still trying to figure out how to make consistent, reliable profit out of these markets. Don't forget, I've got someone standing by 24/7, 365 to give you guys a hand. It has been a fantastic week. Now, don't go messing it up tomorrow. Remember, get in early, get out early. Tomorrow's a Friday. We got the baseball playoffs starting up here in full swing. How about those Cubbies? If you are rooting against the Cubs right now, something is wrong. You must have cold blood in your veins. I got to go buy a Cubs hat, right? I got to start rooting for the Cubbies. If my Red Sox aren't going to be in it, I'm a Dodger. I'm definitely a Dodger fan here in the playoffs, but how can you not root for the Cubs? Guys, what a great time of year to be a trader. It's great. It's a great time to be alive right now. Perfect time of year. Hope you guys had a great week. Don't forget, send me some feedback. Give me a thumbs up on the video, comments on the video, grab the free trial, and I'll see you tomorrow morning, 8 a.m. Eastern Time. My name is Joseph. Adios, amigos. Bye-bye for now.